Hey traders, Mike Sir here. Welcome to my trader psychology live stream series where I help you with the mental side of trading. All right, today we have a really important topic that I'm going to talk about with you, and make sure you stay until the end because I'm going to go through some key points that I think you'll really benefit, especially if you have been trading for a while. All right, so today we are going to talk about win big, lose small. Okay. Now, before we get started, just a normal disclaimer, please consult your financial advisor before making financial decisions. All right. So the concept that we are going to talk about today is when you are right, meaning when you have gotten to a trade and it is profitable, you want to make big profits. But when you are wrong, you want to incur small losses. Now you're thinking, this is a very simple concept, right? Make big profits. Like when you win, okay, try to win big. When you will lose small, right? It's not a breakthrough, type of concept. It's a very simple concept. But what I can tell you is that people do the opposite, okay? People incur big losses and then they look at their profits, they incur or they have very small profits. Now, what is that reason why? Well, it's actually very simple. If you think about from your own perspective, is why would you want to take a loss? Let's just say you get into a trade and it's not working in your favor. So you're thinking, okay, well, I'm comfortable with this loss. It's a very small loss, maybe it will turn around. Then the loss becomes bigger. And then you start saying, well, I still believe in this company, or I still believe in this trade. I'm going to keep holding. And then suddenly it becomes a big loss or a big unrealized loss. And then you're thinking, well, I'm not going to incur this loss. I'm just going to hold it long term. And long term, it's going to turn around. And the next thing you know, you're so deep in the hole. Emotionally, you're drained. You can't incur this loss, and basically you sell. Okay, and that's how you incur that big loss, which basically just started off as a small loss. Now, for on the other aspect is, why do you take small profits? Well, after this type of experience, whenever you see a profit, you take it because that profit may disappear, right? So because you're conditioning yourself, well, I don't want to experience that emotional loss anymore, and I'm just going to, whenever I have a profit, I'll take it, right? Because that profit may disappear. And maybe perhaps you have had scenarios where maybe you didn't have any losses, okay, but you've seen profits disappear. For example, you get into a trade, it's working in your favor, you say, oh, I'm going to hold and hold, and suddenly it reverses, and either you stop out at break even, or basically it gets you out at your stop loss, and you're thinking, I was profit, X amount. Yes, it didn't reach my profit target price yet, but I could have at least made something if I actually took a profit. So what you're really doing is you're conditioning yourself, right, to incur or have small profits. And then you're also, when you don't want to take losses, you incur big losses. So this type of very simple concept where I said to you is, make big profits and incur small losses doesn't work in reality, right? So why do people keep doing that? Well, in this session, I'm going to share with you some ideas to reframe your way of thinking. Then that way you don't incur big losses and small profits. You actually have big profits and small losses. All right, so I'm going to give you some stats here. Professional traders generally have a 40 to 60% win rate. Now, what does that mean? Meaning that they are right 40 to 60% of the time whenever they put on a trade. So 40 to 60% of the time, they will have a winning trade and they will generate a profit from that. Now, historically, I can share with you over my 25 years of experience, mine, win ratio is probably 50-50, okay? Meaning 50% of the trades I put on will probably result in losses. 50% of the trades that I put on will probably result in profits. So this is in general. Now, obviously, if you have less experience or perhaps you are starting out, perhaps that win rate will be lower. But in general, 40 to 60% of the time. Now, I have profitable students who only, or some of them, who have been making money and been profiting in the markets with only a 25 to 30% win rate. Okay, meaning that they are wrong out of 10 trades. They are wrong 7 out of 10 times. 10 trades, 7 trades they lose money. And out of those 3 trades, they make money. So you're thinking, well, how can you actually be successful? How can you actually be profitable if you have such a win percentage rate? Well, let me share you why. Okay, let me show you some examples. So I want to share with you, you need to really look at your risk to reward ratio. So whenever you get into any trade, always assess how much are you risking and how much are you profiting if the trade works out. So you need to look at every dollar that you risk, you must make an X dollar profit. So I've included here some break-even levels. Okay, let's just say you enter in some trades and you want to see, okay, well, what's the target risk reward ratio that I should target if I'm just looking to break even? And that's just a minimum, okay? And again, if you have been following me for a while, risk management is the most important thing. So let's just say you are 50-50 win rate percentage like myself, okay? Every 10 trades you make, 5 losing, 5 winning. So if you risk $1 and you make $1, basically that will be break even, okay? So in this scenario, if you're 50-50 win rate trader, the minimum risk to reward ratio that you should be looking at, the minimum, okay, just to break even, okay, obviously much higher, but the minimum you need to look for is every dollar that you risk, you must make at least $1 on that trade. If you do not make $1 on that trade, or that it doesn't have that potential, then you do not enter into that trade. Okay, I want to be that clear. I want to be clear. Now, if you're 40% win rate, meaning out of 10 trades, you only win 4 out of 10 times and you lose 6 of them, every dollar that you risk, you must make a profit of at least $1.5. Okay, 1.5 times. So if that trade, you put on a trade, you're risking, let's just say $100, okay? You do not take profit until you reach $150 in profit. Because if you historically are 40% win rate trader and you take less than $150 on typical trades when you risk $100, over time, I guarantee you will lose money. Okay, I want to make that very, very clear. So you need to have at least, okay, at least minimum, okay, this is just break even, not making any money. You do not take a profit until it reaches $150 if you're risking $100, for example. Okay, so your risk to reward ratio has to be 1 to 2.5. Now, if you are a 30% win rate trader, every dollar that you risk, you must look for a profit of at least $2.33. Okay, meaning if you're risking $100, you do not take profit until you reach $233 in profit. And if you do that, okay, and you take profits before reaching $233, over the long run, you will lose money. Okay, now I want to emphasize, all these figures that I've mentioned here are just break-even levels, okay? Meaning that you should be targeting at least more than that, okay? Or at least double that. So for example, if you're 50-50 break-even trader, just targeting 1 to 1 just only makes you break even. You should be targeting 2 to 1, okay? Or 1 to 2 to 1. for example. Or for if you're a 40% trader, you should be targeting 1 to 3 to 1. Okay, meaning every dollar that you risk, you must get a profit at least $300 from that. Okay, this will make sure that it doesn't matter. Okay, and you don't have to be right more than wrong. Okay, obviously if you are, then these risk to reward ratios won't have as much impact. But you and I know, okay, again, if some of you guys are experienced out there, you're not going to win every single trade. Okay, you're not going to win 80% of the trade. You're not going to win. You're going to, over the long run. Okay, I've been in the market 25 years. Okay, I'm a 50-50. Okay, if you know what your ratios are, you have to target bigger profits. Okay, and that's one of the reasons why, I've seen so many traders where they see a profit. Oh, I made $500. I'll take it. But then they didn't realize they're actually risking $1,000, for example, on that trade. So you're risking $1,000 to only make $500. It doesn't make sense. Okay, so let me give you some more ideas to think of. Okay, so you got to know your trader stats. I have some millionaire students, okay, or millionaire traders out there. Okay, they only have a 30 to 50% win rate. Okay, so these traders, these very, very successful traders, are not necessarily smarter than you or unsuccessful traders. It's just that when they're right, for example, they make $50,000. Okay, when they're right, they make $50,000 on their trades. But when they're wrong, they lose $5,000. Okay, well, you're thinking 5,000 is huge. But here's what my point that I'm trying to get across to you. They're putting themselves in a position where if they for every dollar that they risk, they're making $10. Okay, I want to emphasize that. They're looking for scenarios where they make big profits. You can see here, right? Every time that they're shooting for profit targets, again, obviously the opportunity has to have the potential. Not every trade's going to work out, but every time that they are shooting for certain profits, they're targeting $50,000 in profit. But when they're wrong, they know what their limit is, and they're not going to lose more than $5,000. Okay, so the key is not necessarily the dollar amount, because everything is all ratio based. Everything, in trading is all scalable. Okay, let's just say you're only playing with $100. If you're playing with $100, you're looking for a 10 to 1 reward to risk ratio, 1 to 10 risk to reward ratio. Every time you risk $100, you got to not take profit until $1,000. Then as you scale, then as you build profits, then every time now you're playing with $10,000. Every time that you put on a $10,000 trade, okay, for example, you're looking for $100,000, right? And then you put on a $100,000 trade, you're looking for $1 million, right? So everything is scalable. So don't worry in terms of the dollar amount. It's the fact that you put yourself in a position where the opportunity has to have big potential. Okay, the opportunity has to have big potential. You're not buying something like that's already at all-time highs, for example, where it doesn't have much more room to go, for example, all right, or close to all-time highs. You're trying to buy something near the bottom where there's big profit potential, right? Or maybe you're risking a very small amount and you're looking for a big profit. Okay, so that's what I want to emphasize to you, and not have the psychological aspect. Seeing, like I have guys who they see a big profit. Let's just say I had guys where they have a $5,000 profit in front of them. Okay, it's great, right? And let's just say they were only risking, for example, $2,500. Okay, so I mean 2 to 1. Okay, 1 to 2 risk reward. Okay, it's not bad. It's not great, but they want to make more. Well, if you take only $5,000 every time, it's going to take you a while to make a huge chunk, right? Let's just say they want to make millions. It's tough, right? Because you have to have a lot of these successful trades, and if you're 50-50 trader, how long will it take you, right? So that's the point where you got to look for big opportunities, and that's why it will result in bigger profits. And if you're wrong, incur small losses. Okay, so now let me just keep on talking a little bit here. So I have unprofitable students or unprofitable traders. They have much higher win rate than the successful traders, or maybe the same. Okay, they have win rates of 50 to 80%. Okay, like I have some traders and some students who are very, very good at scalping in and out, in and out, in and out, for example. Okay, their win ratio is 80%. Okay, they got the skill to be able to profit. Okay, they see discrepancies in the market. Every time they get in, 8 out of 10 trades, they make money. But the problem is when they are right. For example, they make $50. Okay, so they do it quite a number of times a day. They make $50. But when they're wrong, they lose $500 because they allow more room for movement. Okay, they don't get out if the trade doesn't work in their favor. They try to have it rebound, right? Or try to get it back to break even. So you see this analogy, over the long run, it won't work. Because when you're right, you lose $50. Sorry, when you're right, you make $50. When you're wrong, you lose $500. How many of those trades that you need to be right all the time to recover one loss, which is $500? You need to make 10 winning trades in a row just to get back to break even, because you had one loss of $500 and every time you only make $50. So you need to make 10, you lost, let's say $500. You need to make 10 $50 profitable trades in a row just to break even. You see my point here? So that's why, again, if you've been watching me and following me for a while, risk management, okay? Manage your risk. Don't let your losses compound. Don't let your losses become too big for you to recover. And again, being in this market for so long, I've seen so many traders. I've seen so many actually very, very smart traders, very, very, how would I say, traders who have really good trading skills, phenomenal chart reading, fundamentals, you name it, very, very smart students that I've worked with. But I've also seen some of those traders actually not succeed just because of the emotional aspect that they can't manage. Some guys just can't take losses. Okay, so therefore, they may be smart, they may be really accurate in terms of their entries and that they're able to profit, but they just can't take those losses. And again, next week I'm going to talk about how to deal with losses, so I won't go into too much detail, but this is kind of one thing that I want to mention to you, is a very, very important part of trading. All right, so the key, the trader goals for you is to try to hold on to profitable trades as long as possible. Okay, when something is working in your favor, resist the urge to hit the sell button, resist the urge to exit as soon as possible once it, obviously have targets in mind, right? And make sure that it has a proper or attractive risk to reward ratio. Now, once it gets to your target price, what you can choose to do, obviously you never know, right? There's a saying, if you don't go broke taking profits. However, you go broke taking quick profits, right? So the thing that you can do is, if it reaches your target price, okay, and you obviously want to try to hold on, and if you see that the trend's still going in your favor, you can just take some off, right? At least you take some off, then that way you have a profit at least, okay? So if you want to try to ride it as long as possible, you also have to be comfortable with not having any profits at all, right? Because you never know, we never know what price or how much money we can make, right? You know that. How much can you guarantee that you'll make, $500 today? Well, no, it depends, right? How do you know, what price the price is going to get to, right? So we never know. So if you're trying to maximize it, you have to be comfortable with not making much if the trade doesn't go in your favor or it suddenly reverses, right? But I can tell you that to minimize some of that, perhaps again, that's where you need to understand the chart reading. Yeah, you need to be able to see the momentum of the trade. You need to see what the trend of the trade is. So there's a lot of aspects that, again, if you want to work with me, I'll help you with that. But the concept here that I want to get across is try to hold on to your profitable trades as long as possible, and therefore you'll have a chance to actually win big. Now, for the losing trades, okay, you got to cut losing trades immediately, okay, or you predetermine your exit in advance. So if you get in at this price, you put a stop loss. If it goes below here, then you exit. Okay, no questions asked. Now there will be scenarios where maybe you put your stop loss too tight, it kicks you out and then reverses and then goes up in your favor. Well, maybe you put it too tight, or maybe there's scenarios where the market is very, very volatile and you just have to accept that reality that, yes, okay, you cut losing trades immediately, but there are scenarios where you cut it too quickly and then it reverses. But again, concept-wise is don't hold on to losing trades. And again, seen so many traders get into trades, smart guys, smart ladies, just cannot take the loss, and suddenly a small loss becomes a big loss. Third thing is predetermine your risk in advance. Okay, then that way you make sure that you know how much you are risking. And again, there's no set rule on this, but especially when you are first starting out, if you don't have any profits or you're just trading with your principal, not with your profits, right? A guideline is 0.5 to 1% of your capital is all you should risk. Now, once you start making profits, then you obviously want to make more profits, then therefore you can increase your risk. But in the beginning, risk lesser, build your profits. Once you have profits, hey, if you want to risk all your profits on one trade, go ahead, right? Because it's just your profits, and especially if you want to make bigger profits, you obviously need to risk more, right? You can't say I risk very small and I want to make big money. You got to, obviously look for big risk to reward ratios on that. Okay, sometimes some guys I want to risk $1 to make $100. Well, yes, you can, but those type of opportunities do not happen quite often. All right, so the target, last thing I want to talk about is the target. You should, again, just guidelines wise, is every dollar that you risk, okay, you should target $3 profit. That means that if you are risking $100, you do not take any profits, okay, until it reaches $300. And again, you have to look at your charts. It's not just saying, oh, I believe this trade, I'm going to make I'm going to make $500 and I'm going to only risk $100 without looking at the charts, if that is even possible. Okay, again, if you need help in terms of reading charts, reach out to me. But again, general concept is you try to make every dollar that you risk, you should make at least 3 times in profit on that. All right, guys. So if you guys have any questions in regards to what I covered today, just type them in the question box below and I will answer them. All right, so let me look at some of the questions here. So Manzu says, hello, Mike. How did you develop your trading plan and how did you stick to it? Okay, now this is a topic that I can talk about for hours. Okay, and I think I've had some videos that addresses that, but I'll just kind of give you a few key points. Okay, how do you develop a trading plan? Well, it's just like, how do you develop a trading plan for your business? How do you develop a business plan for your business, right? Obviously, what's your goal of your business? How much capital are you starting with? What's your profit target? What's your area that you want to specialize in? What's your trading strategy? How do you manage risk? How do you expand? How do you scale? Do you have the knowledge in terms of this particular area? What's your experience level, right? Whenever you open up a business, right, you have a business plan. It's all laid out. It's the same thing for trading. How do you expect to make a profit in your trading business? Simple, right? Concept-wise, again, if you want to work with me, obviously I can help you with this trading plan. But the concept is you have to lay out what is it that you're trying to achieve. And that's why some traders fail in trading because they have no plan. They're just like winging it every time. Oh, hit buy here. Oh, look, this company looks pretty good. Oh, hey, this opportunity looks good, without any strategy, without any loss prevention. What strategy wise, they're just winging. Oh, hey, this one's moving, I should buy it. Oh, this one's falling, I should short it. Oh, let me use options here. Let me use futures. Let me use forex. All over the place. Now, how do you stick with it? Well, you just follow the plan, right? And again, if you are a business owner, okay, if you're on this video, this live stream, and you're a business owner, apply the same, and you run a very successful business. Do the same thing that you're doing with your business right now, okay? Have a plan, right? Know what your advantage is. You cannot, as a trader, you cannot capture all the opportunities in the world. Like I was speaking yesterday with some of my friends, in China. They did very, very well in this spike up, the past few weeks. Well, I wasn't focusing on the China market. I don't really follow that. So they have a niche, right? And they made a profit. Well, that area is not my forte, or I don't know what's really going on there, so I don't trade it. My market is the US and Canadian market, right? Or specific sectors. So I know exactly what I'm looking for. And I know what my knowledge is. I know what the strategies are, that I'm implementing. I know what my risk tolerance is. I know, if I follow my stats, right? It's the same thing in your business. I want to expand. I got to hire employees. You don't just wing it, right? You have to have plan in place and the resources, and you got to look at your performance, right? Look at your performance every week. Hey, what am I doing right? Keep doing it, right? What am I doing wrong? Stop doing that or minimize doing that. That's really as simple as that. But obviously, again, it's all, when you really develop that trading plan, it's the details to really knowing who you are. Because you know what? The trading business is you, okay? And it's right here. This is the biggest part. And that's why, many traders go into trading thinking, oh, I just need the knowledge. I'm just going to learn, read tons of books, take tons of courses, just get some experience behind me, and suddenly I'm going to be successful. Well, that's just, part of the aspect. It's here, okay? And even, like I will tell you, even after 25 years in the market, okay, started in 99, right? It's still, ongoing challenge, right? Because I'm human, right? I have emotions, right? So that's why I hope that I can share my experiences with you guys on these live streams and really help you master that mindset. Because if this thing here is not working that well, okay, and you got the knowledge, right? You can say, I've got so much experience, right? 25 years experience. I've got a ton of knowledge, okay? And then you should say, well, I'll be very successful, okay? In reality, in some sense, it's true. But if this is not taken care of, if I'm in a bad state, if I'm in a bad emotional state due to something happened in my life, something with regards to that, I won't be successful, right? So therefore, focus on this mental side, and the rest will take care of itself. All right, I answered that in a very long manner. All right, other questions. Favor Mike, I've been trading a strategy with a 0.3 risk to reward ratio with 90% win rate over 3 months. So does that mean it won't be profitable in the long run, or one day my account is going to crash? Yeah, I mean, it's you are very similar to one student that I had trained before. Again, he had a 0.1 to 1 risk reward ratio, okay? Every dollar that he risked, he's only making 10 cents. and he's 80% success ratio. So I will tell you, favor Mike, stop that strategy, okay? Unless you can tell me, unless you can be very, very confident your strategy is close to 100%, just one loss will kill all your profits. And again, I've seen it so many times. I would actually suggest that you have a strategy, okay, where every dollar that you risk or every 10 cents that you risk, you try to profit $1 from it. Okay, because that means you can be wrong so many times, but actually still make money. Because you and I, we're not, I mean, we obviously want to, as we are getting into this AI age of trying to improve efficiency, but you and I are still human, so we have lots of flaws. Maybe on a certain day, you may be a 90%, right? You're very focused, you're very sharp, but it only takes one day, you feel a bad day, your 90% suddenly becomes much less than that. And if you follow that type of risk to reward ratio, you will lose money. Okay, I can absolutely be very confident that, again, nothing about you, but I can say that this type of approach will result in losing money for you in the long run. All right, any more questions? If there's no more questions, shoot me off an email. Like, again, I read all the comments. Let me know what I can do to help you. And again, I say this in all live streams, right? I'm doing this live stream on a Sunday morning to help you. It's not for me. I'd rather sleep in, okay? So I'm here to help you. Shoot me off some questions. Email me, contact@mikesir.com. Put your questions in the comment box. Let me know I can help you, okay, on this mental side of trading. All right, next week we are going to talk about how to deal with losses, okay? How do you deal with it when you suddenly incur huge losses, when you have been having losing streaks, when you look at your P&L, you're not profitable. How do you deal with, how can you turn around your losing streak? I'll talk about that in next week's live stream. All right, guys, thank you so much for joining me. And, I've just basically resumed all these live trading psychology live stream series. I hope you guys enjoy it. Send me some topics which you want me to cover. I'm here for you, here to help you in any way that I can, share my experiences and knowledge with you guys. All right, guys, enjoy the rest of your day, and I will speak to you guys next week, how to deal with losses.